Beyond the bank, fast-track funding solutions for women entrepreneurs. By avibusinesssolutions.com. Cash flow problems do not wait for perfect timing. If payroll is due, inventory needs to be restocked, or a new contract requires upfront spending, small business funding for women becomes less about theory and more about getting the right capital fast without creating a bigger problem later. For many women business owners, the challenge is not a lack of demand or discipline. Is finding funding that matches the business's stage, the speed of the need, and the reality of how revenue comes in. A newer business may not qualify for traditional bank financing. A growing company may need more flexibility than a fixed-term loan can offer. The right move depends on what the money is for, how quickly it is needed, and how comfortably the business can repay it. What small business funding for women really means. Small business funding for women is not always a separate category with a completely different underwriting standard. In many cases, it means identifying financing programs, lenders, and funding structures that are accessible to women-owned businesses and realistic for the way many small companies actually operate. That can include term loans, business lines of credit, revenue-based funding, equipment financing, grants, and community lending programs. Some options are built specifically for women entrepreneurs. Others are open to any qualified business, but are often a better fit because they move faster, require less paperwork, or prioritize business performance over old-school lending standards. The key is not chasing whatever looks cheapest at first glance. The key is matching the product to the purpose. Low-cost money that arrives too late can hurt just as much as expensive money that strains cash flow. Start with the use case, not the lender. Before comparing offers, clarify why you need capital. This simple step eliminates much of the bad fit funding. If the goal is short-term working capital, a business line of credit often makes more sense than a large lump sum loan. You draw what you need, tie payments more closely to actual usage, and maintain flexibility for uneven months. If a need is for a one-time purchase, such as equipment or build-out costs, a term loan may be cleaner and easier to budget. If you need to cover a gap before receivables come in, speed matters more than chasing the lowest advertised rate. If you are investing in long-term growth, monthly affordability matters more than immediate access. Business owners who separate urgent needs from strategic needs usually make stronger funding decisions. The most practical funding options for women-owned businesses. Business lines of credit. A line of credit is one of the most useful tools for a small business with changing cash needs. It can help manage payroll timing, inventory purchases, marketing campaigns, seasonal swings, or repair costs without forcing you to borrow more than necessary. This option is especially useful if revenue is steady but uneven. Instead of taking one large loan and paying interest on the full amount from day one, you can draw only what you need. The trade-off is that rates can be higher than traditional bank products, especially for newer businesses or borrowers with weaker credit. Short-term business loans. When speed is the priority, short-term financing can provide quick access to capital. This can work well for urgent purchases, time-sensitive opportunities, or temporary operating pressure. The downside is cost. Faster funding usually comes with higher pricing and shorter repayment cycles. That is not automatically a bad deal if the capital helps you protect revenue or produce a clear return. It becomes a bad deal when repayment pressure starts eating into basic operations. Traditional term loans. For established businesses with stronger revenue and cleaner financials, term loans can offer more predictable repayment and lower overall borrowing costs. They are often a better fit for expansion, hiring, larger equipment purchases, or refinancing higher-cost debt. The trade-off is time and documentation. Approval can take longer, and lenders may want stronger credit, longer time in business, and more complete financial records. If your need is immediate, this route may be too slow. Grants and special programs. Some women entrepreneurs should absolutely pursue grants or targeted business programs, especially if they operate in underserved communities, launch mission-driven companies, or qualify for local and industry-specific support. Grants are attractive because they do not require repayment. But grants are not a reliable solution for urgent cash flow needs. They are competitive, time-consuming, and often tied to strict eligibility rules. Think of them as a bonus growth channel, not your emergency capital plan. What lenders usually look at. Many business owners assume funding decisions come down to personal credit alone. That is only part of the picture. Many lenders also look at monthly revenue, time in business, average bank balance, recent cash flow trends, and the health of existing debt obligations. If your business has been operating for at least several months and is generating consistent deposits, you may have more options than you think. Strong revenue can offset weaker areas in some cases. On the other hand, even a solid credit score may not help much if the business is unstable or overextended. This is why clean records matter. Up-to-date bank statements, organized bookkeeping, current identification, and a clear explanation of how funds will be used can improve both approval odds and the quality of the offer. How to improve your chances of approval. Separate business and personal finances. If business income is deposited into personal accounts, underwriting becomes more difficult and your business appears less established. A dedicated business bank account helps lenders verify revenue and see operational consistency. Know your monthly numbers. You do not need a perfect spreadsheet empire, but you do need to know revenue, expenses, profit trends, and existing debt payments. If a lender asks how much capital the business can realistically support, guessing is not a strategy. Borrow for a clear return. N. Funding works best when tied to a practical outcome. Buying inventory that will sell, bridging receivables, launching a campaign with measurable demand, or covering a short-term gap tied to expected revenue. Borrowing without a plan increases the risk of stacking debt rather than solving the problem. Avoid taking more than the business can comfortably carry. Getting approved is not the same as getting the right amount. The strongest move is often to borrow less, preserve flexibility, and leave room for future capital if growth accelerates. Common mistakes that cost women-owned businesses time and money. One mistake is waiting too long. Many owners start looking for funding only after cash flow is already tight. At that point, options narrow and pricing usually gets worse. The best time to explore the capital is before it becomes urgent. Another mistake is focusing only on the rate. Cost matters, but so do speed, payment terms, prepayment rules, and whether the financing actually aligns with the business cycle. A cheaper product with rigid terms can create more pressure than a moderately priced option built for flexibility. There's also the issue of underestimating the impact of funding on operations. Daily or weekly repayments may work for some businesses with frequent sales, but they can strain businesses with slower invoice cycles or seasonal revenue. The funding has to align with the business's rhythm. When fast funding makes sense. Fast funding is not just for businesses in trouble. It can be the right move when inventory is discounted, a large customer order needs immediate fulfillment, equipment failure threatens revenue, or a short-term gap would otherwise force you to miss payroll or marketing momentum. The important part is discipline. Fast capital should solve a defined problem or support a defined opportunity. If it is only postponing a deeper issue, such as weak margins or poor collections, the money may buy time without creating stability. For women-owned businesses that need practical access to working capital, speed and simplicity matter. That is why many owners choose solution-driven providers that can help them match funding to their current business performance rather than forcing them through a slow, one-size-fits-all process. AVI Business Solutions fits naturally into that conversation because many entrepreneurs want one place to access funding,
Running a small business
operational
means being
tools,
ready for
and
anything.
services that
But what
support
happens
growth
when the big
without
banks say
extra
no?
friction.
At AVI
Choosing the right
Business
small
Solutions,
business
we say
funding
yes.
for women.